Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. Let's take a look at the midweek market update, shall we? Let's look under the hood, pop open Bitcoin and Ethereum. They're the two most robust chains as of late. Certainly tons of data surrounding them, which is why I talk about those two mainly. Data today provided by Glassnode and a few dark mode, light mode charts here, so sorry about that. But I always like to look at what is the transactional activity? Is it leading? Is it lagging? Is there a trend here? Is anything going on? Whether it be multi-week, multi-year. Thus far, even with the price decline, transaction counts still holding at the level they were holding at. Nothing really pressing here to talk about, right? We're still in a range. Things are still happening. It's not like 2018. Again, I talk about this every video, but because it was so stark, where you had overnight activity essentially drop by over 50%. So we certainly haven't seen that, with this decline in the 20 to 30 range. It's more of the same so far. Going to Ethereum as well. Blue is Ethereum, orange is BTC, in case you're confused as I flip back and forth here. But I thought it'd be good to just compare and contrast a little bit. ETH has rising transactions week over week here with the price decline. NFT activity is a bit softer. In general, lending and borrowing a bit softer. Not absent, right? We're still seeing this baseline transactional activity. Again, unlike 2018, 2019, that was sort of a portend for an extended bearish market. That isn't to say we can't go through this extended bearish market here, but activity is still fairly robust for where price is sitting on Ethereum. Something else to talk about is the Bitcoin Lightning Network capacity. This is similar to a debit card system, where you can only transact on layer 2 Lightning if you put Bitcoin onto layer 2. So you have to have that money available. And the capacity on layer 2 for Bitcoin continues to increase. Now it's at nearly 3,800 BTC, which on a notional basis may not be that large, but it is growing, continuing to grow. Some of this is El Salvador, some of this is Twitter, some of this is exchanges finally adding Lightning, right? It took exchanges an extremely long time to add other scaling initiatives in the past. They had to be pressured and sort of not coerced or bullied, but they had to be reminded that people really want these things in order to transact in a cheaper and quicker way. Sam of FTX said yesterday that they will be adding Lightning on their exchange. So the uptake has been slow, but we're getting there as far as this transactional layer on top of Bitcoin. And we can also look at total fees, which is always interesting. And there are tons of caveats with all this data, obviously. You sort of have to know what was going on during this time period in 2017 and 2018. Not only were there this euphoric rush of people onto Bitcoin to buy it, to use it, to do stuff with it, but we also had this attack on the network that was pushing fees higher in order to push this political agenda to make blocks bigger. Governance debate, that's a whole nother video entirely, but you have to keep that in mind when you're looking at stuff like this. So what was going on in that period? Yes, it was a bull market. These are fees priced in BTC specifically, but it does also tell you in a bull market, generally, we do see rising fees on chains because there's generally more activity, right? Just as we did 2020, 2021, 2022 thus far, we haven't really seen a pickup in total fees per day on the chain. Over the past week, you can see, we're slowly starting to creep up here. And you can compare that to other bear markets where throughout the bear market, any one day in general isn't anything trend-wise, but it does diverge from price in that you typically do see week over week, day over day, fees slowly start to come back, likely because you see activity slowly start to come back. So one narrative you could assign to this is perhaps it's hitting price levels for people where they find it comfortable to get back in the market again or to get in for the first time, right? You're also seeing people who are forced sellers who have to sell. You're seeing people who are moving stuff around for collateral to exchanges, all sorts of reasons, right? Volatility in price generally breeds transaction fee volatility as well. And here's the white mode, so sorry about that. But comparing this to the mempool itself, which is the number of transactions sort of waiting to be confirmed, we can look at that and see with price, again, you do see people start to transact on the chain in a different way. This was the biggest spike we've seen in activity in a long time. One way to read this is you can say, okay, these are the number of pending transactions. on the y-axis. And the colors here represent total fees in some cases, depending if you want to look at fees. But you can see fees spiked extremely high. Some of this is consolidation of transactions as well. So again, you have to know what you're looking at here. But all in all, there was a spike in activity on the chain. Now for ETH, it's been a different story since DeFi took off in 2020. ETH has had continuous scalability issues, really is what it comes down to. It's hitting this ceiling in fees that are peaking and troughing as people sort of go elsewhere because fees are too high. They come back because fees drop off and then they go somewhere else. Like, they go to Binance Smart Chain or they go to AVAX, they go to some other layer 2 solution. So ETH's fees look a little different and they are arguably more fixed and continuous as they're still dealing with how to scale properly, right? This is both a bearish problem, maybe long-term, but definitely bullish short-term because it means people are here, people are using the chain. It has a reason to exist. And if you look at ETH's unconfirmed transaction counts over the past 6 months, let's say, you can see it hitting the ceiling of its ability to even keep these transactions in the mempool. So these are pending transactions that are eventually just kicked out because they've been in there too long. At least that's how it operates on ETH for the most part. And some of this cooled off into March, into April. But again, we're seeing fees sort of pick up on Ethereum a little bit as price falls. So, it's not like all this stuff is happening on price and nobody cares on chain, right? You can definitely see the reactions on chain. And I like to see activity pick up rather than fall off. And here's active addresses on Bitcoin. You can see this is a multi-month high, maybe a 1-year high plus at this point for on-chain activity as far as active addresses are concerned. The only other times active addresses have been this high were the 2017-2018 peak, the January to May peak, and that's it, right? We're talking over 1 million addresses, kind of the magic number. Very few times when you see this type of activity. So there's definitely emotion built into this. As I said, price is volatile. People are doing stuff and things, right, that they don't otherwise do, perhaps. They're selling, they're buying, they're transacting in ways that they hadn't been before. Ethereum also perking up a little bit, not as much. Ethereum, again, has this baseline on-chain activity, largely due to DeFi, in my opinion, because DeFi has been absorbed onto ETH and is here to stay. Bitcoin's hash rate as well. When you're talking about mining profitability, it's electricity costs, it's Bitcoin price, it's network difficulty, it's hardware costs, it's overhead, it's all those things put together. So even despite price dropping 60% from highs, hash rate is continuing to increase. So this tells me that miners are still finding electricity in places where it's profitable, probably sub 5 cents per kilowatt hour. They're still deploying ASICs, probably from China and elsewhere, new ASICs as well that are coming online in the past month. In the next couple months, there's several ASICs coming down the pipe. So they're still finding profitability here. Additionally, there are miners who mine at a loss on purpose, right? Eventually, they can't pay for overhead anymore and they have to shut off. But in general, hash rate here looks pretty clean as far as an uptrend is concerned. We can go on the monthly average and it's nothing but all-time highs, really. Now, there will be a price point where you'll see a spike down in hash rate and there'll be headlines. Everybody gets super excited in the press when there's a reason for something to be down as much as it was like in China when the exodus happened, right? So you may see that if price goes lower, but in general, hash rate's still climbing. And even with ETH, a project where they're switching to proof of stake, you're still seeing hash rate go higher and higher and higher. This will go to zero, right? They are switching their algorithm from proof of work to proof of stake. So there will be no mining on ETH. But again, if we talk about fees and incentives, the fees on ETH are so high that it's still worth it for miners to use GPUs to mine ETH. We're seeing the GPU market slowly turn down as far as the secondary markets are concerned. Prices are less hot. You can find a GPU now, whereas months ago you couldn't, but you're still seeing hash rate increase here regardless. Looking at balances on exchanges as well, we had a mini spike here in balances on exchanges for BTC on its way back down, but it makes sense. We had the Luna Foundation Guard sending BTC, mainly Jump Crypto specifically, sending BTC to exchanges. We had all sorts of shenanigans around Terra Luna sending coins in places. So that definitely is one of the reasons why this perked up as high as it did. but it's on its way down again. This isn't some golden metric, holy grail, but in general, in bear markets, we've seen continuous deposits of coin onto exchanges. Now you could say, well, we saw it in a bull market as well in 2017, 2018, but we've really never seen a reduction in coins on exchanges like we have since the Corona bottom, the COVID bottom in March 2020. So much like hash rate has a tipping point where miners become unprofitable, there, I assume, is a tipping point with coin on exchanges where if we start to turn up in any way, right, things get a little illiquid to the upside in that event. ETH also similar. Coins slightly perking up a couple days ago on exchanges, but are now back down again. And thus far, we really haven't seen a reason for ETH holders to send coins to exchanges en masse. They can participate in exchange activity outside of centralized exchanges, and I expect this to just continue to dwindle over time. One last thing to look at as far as under the hood is just funding rates. How bearish or bullish are we based on how people are trading this? And again, you can compare this to May, June, July for BTC when we dropped quickly. You saw fees go negative quickly. Prior to that period, we had positive funding, which means longs are paying shorts here. Shorts are paying longs if this is red. Over the past couple weeks, we've been basically flat on funding. There's no real trend here. One thing you'll notice is when we're trending, funding typically holds levels and continues to increase. We're not really seeing that in this case just yet. Ethereum as well, same thing. Funding basically flat here. Not too much going on the funding side of things. Flipping gears to technicals. This, I think, is the most important chart for BTC. This is the 2-year MA multiplier, the 2-year MA in the green, the multiplier in the red, the 200-week moving average in the green here. This is the EMA. The MA is even more generous, but again, this gives you zones of oversold, overbought. So as we approach a price underneath the 200-week EMA, in between the MA and the EMA, it depends how many hairs you want to pull here and how deep you want to get. But the 2-year MA is already telling you, okay, we're below that. So historically, when we've been below that, we've been oversold. Yes, it may take a while to get out of this zone, but if DCA is your play, then generally this is a safe place to do it. Not investment advice, okay? Not financial advice, just one strategy. Below that, you can say, okay, the 200-week EMA has also given us a zone below where we've said, okay, this is actually extremely oversold now. And if you pop on the 200-week MA, that has given you more of a pinpoint price, currently at 22K. So for me, anything between 22 and 34, is the zone where historically we've either based for a couple months, we've sat in, we've sort of formed a bottom, or we've bounced rather quickly. I don't think we're going to bounce quickly out of this because of macro stuff, which I'll talk about in a second. But this is all pre-QT for those familiar with QT and QE and where we've been historically in those cycles with Bitcoin. We can also look at other trend metrics, 50 and 200, which most people know of, even if you're not a technical trader. This is a buffet. Some people like moving averages. Some people like open interest. Some people like on-chain activity. Different strokes for different folks. But even on the 50 and the 200, we're definitely below the 200. We're below the 50. These are not things that are common in a bullish market, right? It's pretty obvious when we're bullish, we're above these, we're bouncing above them. When we're bearish, we're below them, we're bouncing below them. They're acting as resistance. So although we're still in the 2021 range, things are definitely on the bearish side of things. You can even split this even further and say, okay, let's look at the weekly 60 MA. Just pick anything you want. How does it look on backtesting? Does it give you a pretty good idea of what's going on? And arguably, even the 60 MA tells you as a litmus test, we're bullish when we're above, we're bearish when we're below, and that's kind of it. Currently we're below, right? Another way to measure this as far as overbought, oversold is to look and see how far above or below we've been from this level before we've reversed, right? Just eyeballing it, you can sort of see where we've been, like the tolerance in the market for bullishness or bearishness. You could estimate, okay, we potentially, if we're really going to be bearish, this thing could extend lower, and the market could still tolerate it based on historic conditions, So yes, trend metrics are bearish. Bollinger Bands are bearish. We're just starting to expand out of this. This is our 8th week in a row being red. We've never had 7 weeks red in a row, certainly not 8. And we're just starting volatility expansion here on the caliber of the bands. If you look at how far apart these are, again, another measure of overbought, oversold. In bull markets, we tend to walk above the bands. In bear markets, we tend to walk down the bands. Even in 2014, 2015, we can recover in a sideways fashion and then just get denied at the 20 moving average again, right? So that's another key level to look for. No matter how you want to slice this, there really isn't a bullish lens that you can look at based on moving averages. It just isn't there. There's no evidence to support that. ETH is very much the same. The analysis is very much the same. Still in the 2021 range, basically at the range lows. ETH has some technical supports at 1300 S1 yearly pivot. Something else you want to look for and watch for is a bullish divergence on momentum. Basically, a lower low on less momentum would be a bullish divergence, similar to what we saw in May, June, July. But it's very early. This is a marathon, not a sprint. So I wouldn't get too excited one way or the other. ETH BTC does look good, does continue to look good. If this were in a vacuum just based on the trend chart pattern, you'd expect this to break higher. This is an ascending triangle, and generally these tend to break and have an answer for you by the time it's 3/4 of the way full. Not quite there yet. It's at risk because it's at the bottom of that support currently, but all other things being equal, you'd assume that this would break up. Whereas previously when we were in this zone, we had all sorts of things. We had M double top, inverted cup and handle, right? There were all sorts of fractals that tell you we're probably not going to go higher here. Inverted Adam and Eve. Not really seeing any of that yet. It's very tight as far as the consolidation pattern. Not too noisy. And the levels are pretty clear how this wants to play out. Now, whether that'll happen, I don't know. But one way it could is with the catalyst of the merge coming later in the year. I will say with Terra Luna UST exploding, the pressure on this merge succeeding has gotten exponentially higher. So definitely worth keeping a close eye on ETH BTC. For DeFi, this is the DeFi perpetual index from FTX, market cap weighted, Uniswap on down. And DeFi has taken a massive hit out of its 2021 range now. It ranged up here for a year plus. And this looks like for selling capitulation, down 50% in a couple days. Just absolutely ugly out there. Parabolic to the downside. This is going to take time to recover. Certainly it's going to take time to bottom. All the same types of analysis you could apply to this as you did to BTC or ETH. It's pretty obvious that this is not bullish. What you're looking for here is certainly bearish exhaustion or a bullish divergence to tell you maybe the lows are in for now. And just like we saw here, a series of lows on less momentum, bullish divergence. Something to watch for here in the next couple months. Moving to legacy real quick, DXY finally starting to roll over a little bit. This is, again, based on a technical pattern, not knowing what this is. You don't see this too often because it represents, parabolic upside, right? Usually there's a major reason for something like this to happen and take shape like this. And there certainly is in the DXY's case. But crypto has been trading inverse to the DXY for a couple months now, really since the beginning of the year. So the higher this goes, the more it hurts crypto in the near term. So if this thing can reverse, settle down, retrace some, then I think crypto has a chance at bottoming quite nicely. We are also still rather coupled to S&P, Nasdaq, and ideally we're seeing people who treat Bitcoin and crypto as risk on sell to people who treat it as risk off. And then we start to see this decoupling. Maybe that's a pipe dream. But one possibility of how we can get decoupled from traditional finance is that such event. Because right now we are the most correlated we've ever been in the history of crypto on any time frame you want to look at. And the correlations are at all-time highs. So if and when that does break, it should be rather obvious. We're going in a different direction. Stablecoins really quick. We saw USDT and USDC see some price volatility. We saw USDT drop from $1 to 9958, and we saw USDC rise to about $1.14 on Binance, and then some. These are end of day, not intraday prices, I believe. But when we're talking about a depegging event for UST, for example, UST is at like 10 cents or less. Most algo stablecoins when they fail forever. They don't recover. And fiat-backed stablecoins or stablecoins with reserves do survive because the reserves aren't based on a volatile asset where there is not a one-to-one backing and it ends up being insolvent, which is what happened in Terra's case. We did see significant redemptions on USDT in the green here. This is circulating supply. So 7.5 billion has been redeemed, whereas we're seeing USDC grow in circulating supply. So the market is telling you it views USDT as a more risky play than USDC. Market is also telling you, based on what I've seen, I haven't heard anybody complaining of slowed redemptions or an inability to redeem one-to-one. And this is just a natural process for stablecoins, right? Like, we trust that they have what they have in reserves. Sometimes some of these are audited. In USDC's case, they get audited twice a year. Both of these products offer monthly attestations to just say this is how much we have in our bank. Somebody signs off on that. But when we're talking about a bank run on an algorithmic stablecoin, it's very different than stablecoins that have reserves in a bank. So that's all I have for this one. Like, share, subscribe. Let me know what I missed in the comments below, and happy trading.